Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by John Belizaire, the CEO of Soluna Holdings. This is a company we've covered extensively over the last few months. Very differentiated and unique approach or outlook to the Bitcoin mining space. There's a lot going on at this company, not to mention they just came out with earnings, which we're going to talk about in today's video. Now, before we get into that, please take a second, hit the like button, you guys. It's 100% free to do. It's a huge help to me and the channel, and Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of Soluna, your outlook for 2024, and your thoughts on their financial results from last year. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got a special guest for you, John Belizaire, who's the CEO of Soluna Holdings. Now, John's been on the program before. Obviously, a lot going on at this business since we've talked last, but in today's video, we've got a special discussion surrounding earnings and the plan and outlook for 2024 here as we head into halving. We've also brought our resident Bitcoin mining analyst, Anthony Power, along, and we've got a good list of questions to get into in today's interview. So John, thanks so much for being with us here today.
Bryce, it's great to be back. Always enjoy these conversations, and I feel like it's been a year since we last spoke, but it's only been a couple of months, so that tells you how dense the last few weeks have been for us.
It certainly is. Anthony and I always are saying how much news and activities going on in the Bitcoin mining space. I can't imagine being the CEO of one of these companies, John. And that's a great segue actually to kick things off here. Because it's been a few months and there's been so much going on, can you give us a quick background, maybe for those who missed our initial discussion, just on yourself and what Soluna Holdings is all about?
Absolutely. So for those of you who don't know me, welcome to Soluna. Soluna Holdings is a company focused on building green infrastructure for Bitcoin mining and beyond. We go to wind farms, solar farms, utility scale facilities that are owned by some of the largest infrastructure companies in the world, and solve a major problem that they have. About 30 to 40% of their power cannot be monetized. It's highly curtailed by the grid, and we build data centers at the location of those facilities, co-locating them with those power plants, and essentially convert that power into global computing resources for Bitcoin mining, and as we've just announced, the plan to go into AI as well. It's a very exciting time to be doing this because computing is going through a major revolution. There is a huge demand for more sustainable energy for powering these computing applications. So bringing computing and renewable energy together, or converging them, if you will, is a very powerful innovation that we've been working on for the better part of 5 years. I am a serial entrepreneur, I guess you can call me. I have 25 years experience being in the technology industry. Started my career at Intel doing helping to drive the semiconductor space and driving the PC's interconnection or convergence with the internet. And over the course of the ensuing 25 years, I've built a number of companies focused on solving big problems in enterprise companies. And it's almost always a convergence or a confluence of, transformational technology waves that are happening, and a legacy industry. And Soluna is very much that theme, right? There's big changes happening in renewables. There's big changes happening in the distributed computing space, and the rise of Bitcoin is a fantastic technology for helping to shape the future of financial services and a host of other things. And I'm essentially in the middle of sort of the convergence of those two things coming together. And that's at the heart of what Soluna does.
I love that analogy, John. You used that on our initial discussion as well. Really helping legacy industry keep up with future innovation and technology is what I think of when I think of Soluna. And you can obviously see the wind farms behind you in the visual there. And what's so unique about this business is you guys go out to existing renewable projects and you harness stranded power that would otherwise just be lost or wasted. And we know with renewables, obviously this power is oftentimes hard to store. So on that topic, or or flavor. Can you just tell us quickly, John, some of the key differentiators now with Soluna Holdings compared to your traditional pure play miners?
Yeah, I mean, we outlined these distinctives, as we call them, which I think is important to know as a company. What makes you unique in any market that you're in? What's your wedge, if you will, that you're gonna master? For us, there are four key distinctives. One is that we are really at this point considered the leading curtailment solutions provider. Our brand is now synonymous with curtailment mitigation in the renewable energy space. We have relationships with some of the industry's leading renewable energy developers and power plant owners. And these are not small, single shingle guys or gals. These are some of the largest infrastructure owners of assets in the world, some of the most forward-thinking power plant companies in the world. And they really see the Soluna solution as a way to help address one of the biggest issues in their market. That has allowed us to build a 2 gigawatt strong pipeline, one of the key assets the company has. And we're constantly de-risking those projects, unlocking access to low cost power resources that we can use to deliver sustainable computing. And we have found a repeatable way to do that, to grow that supply of sustainable power that can be done on a much faster timeline than traditional data center companies and companies looking for this asset to build out capabilities, and also our peers in the industry. Unlocking this volume of powers can be challenging for folks. Some people are out there buying it, some people are out there doing transactions, and we're home growing them, if you will, through our pipeline. And we've developed a unique behind the meter strategy for monetizing these things. And so that solution orientation has really differentiated us. The second thing is we're an infrastructure company. So we actually build things. So we build, own, and jointly own and operate our data centers and the related power infrastructure. Our proprietary design is modular and scalable, and it's really designed for applications like Bitcoin mining and beyond. And our data centers are managed by a proprietary software platform that we built that allows us to optimize the operation of those facilities for the different applications. So we read grid signals, we can control the flexibility of that data center to source power from all the different sources that we unlock by being behind the meter. And it has allowed us to create the greenest, if you want to use that term, or carbon zero or neutral facilities that are 18% more efficient than traditional data centers, and by our own measures, almost 40% more greener and efficient than our peers in the crypto industry. So those are two distinctives. The last two are we have a strong return on invested capital. If you invest in our projects as a capital allocator, our unique approach basically allows us to build out these projects very fast. They start returning capital very fast, and we can deliver a return on that capital in 2 years or less. And then the last piece is that we have a combination of expertise in our company that really makes us attractive to these renewable energy power producers, the grid operators, and these new computing partners that we've been working with on our new AI initiative. And that's because we know project development, we understand energy markets at our core, very distinctively, almost at a DNA level. We understand computing technology and how to use software to essentially deliver on the hardware that we build, and we understand project finance. These four distinctives are key differentiators, we believe, for us in the space of Bitcoin and in the broader sustainable data center space.
That's some very good points there, John. I obviously we're in the midst of earnings season at the moment, with companies reporting literally every day these last few weeks. Can you give us a sort of a high level overview of your recent earnings and announcements and some of the highlights from 2023?
Yeah, absolutely. We're, first of all, I'm proud to say that, we have done an incredible job executing over the past year. That was not me. It's the benefit of leading a very strong, resilient team. When people ask me what happened what was last year ascending into the CEO role and leading this team, and I like to say that it was like, steering a ship through some really choppy waters while you were rebuilding the ship so that you can turn it toward, a brighter, newer horizon. And, we put our heads down despite the naysayers out there and have really focused on executing on the business and getting us through these tumultuous periods and back to growth. So what was the results? Number one, we had record revenue. Revenue in the fourth quarter ramped up to $10 million compared to the third quarter of $5.8 million. That's a 75% increase. And that was driven primarily to the ramp of our Dorothy project. I like to say Project Dorothy was both the most challenging project, our first project, and also the project that really is our lighthouse. It's the blueprint for what we will do in the future. But Q4 this past quarter was the highest quarter we've had in the past 16 quarters. So in the last 4 years, it was the most successful quarter that we've had. So we're certainly going in the right direction. Let's talk about profit. We had record gross profit. So gross profit is, gross profit across the different business units and projects. That grew to about $4.3 million. It was the highest profit quarter for us since we started the crypto business. So Soluna was a private company that merged into a public entity that had launched a crypto arm, and we became the operating unit of that crypto arm. And so that took place in 2020, right in the middle of the pandemic. And, here we are experiencing, our highest gross profit related to that new segment. Positive EBITDA we had in the fourth quarter as well. We had announced a $405,000 positive adjusted EBITDA in that quarter. And in Q4, that grew to $1 million. And so the adjusted profit, and for the audience, adjusted EBITDA basically is taking out the sort of accounting level things that you see in the P&L that are not really indicative of the true operating elements of the business, things like stock compensation and things like that have to be loaded in there. So if you fundamentally look at the business itself, we're certainly going in the right direction. We had a much stronger balance sheet in these earnings here and in earnings material we sent out. Current cash and restricted cash as of the end of last year was $9.4 million. And that's a huge difference than the year prior, which was closer to $1 million. The balance sheet momentum continues, by the way, with the recent Fourth Amendment with the note holders and what's been happening with Bitcoin. We added another $3 million that's from the note holder amendment that'll help us bolster our balance sheet into the halving. So we feel pretty good about our balance sheet position. We made a substantial ramp of the flagship project in the second half of the year. So if you look at the business, right, we started changing the business model the early part of last year, going from a development project to a construction project to moving it into operations, and then ramping up that project as quickly as possible through some pretty challenging weather through the hot summer and into the cold winter months. The net result was that Dorothy 1A and 1B combined generated $13.7 million of revenue, which was up about 65% of the company's, represented about 65% of the company's total full year revenue. Just exciting. And I think the last thing is we delivered on our plan to diversify the business model. We completed a series of architectural changes to the business to diversify across 4 areas. So I've put this picture out before. maybe you guys can put it in the video, but it's that 4 quadrants that sort of show all the ways we make money as a business. So we started out as 100% proprietary mining in the crypto segment. And then we essentially started an architecture last year to add hosting and grow that side of the business. So we signed some pretty strategic hosting partnerships, and then brought in some more toward the tail end of the year. And then we've been talking about expanding into the ancillary services sector, and we did achieve that last year. Completed our filing, testing by ERCOT, and implementation, and now we're earning revenue on that, and we started earning that last quarter. So that's 3 out of the 4 key segments. And then AI, we signed our first AI hosting contract. That was this year, not last year. But there's a whole host of initiatives that we're going to be announcing this year around that 4th segment. And we expect by the second half of this year, you'll have all 4 blue, right? So those will be the 4 sort of completion of our revenue focused areas. So I know that was a lot if people were keeping up with me, or you guys are keeping up with me, but needless to say, we are a completely different company than we were a year ago.
That's good to hear. And I want to pick up on a couple of things you mentioned there. Firstly, the strength of the balance sheet looks impressive. I mean, I was just looking today at the share price, and under $3, and the number of outstanding shares that got available, I think 2.8 million was on the 10K.
Right.
So at that point, so that tells, roughly that gives me a valuation of about 8 million in terms of market capitalization. And then it goes to the shareholders' equity to shareholders, and that's about 27 million. Mm-hmm. And so, if you look at looking at comparing you with other peer miners, that's a significant benefit on a share basis. So what shareholders have actually got as a value for that share in terms of assets, net assets, significantly higher than, I'm going to say, pretty much all the other mining companies. I mean, yes, you are in terms of market capitalization one of the smallest ones, but you've got strength in that balance sheet, and strength is what you're going to need going through this halving coming up. The point I want to raise as well was you alluded to there about the growth now, and we saw Q4 was effectively a massive ramp up. Are you? I mean, obviously results will come out in the next month or so for Q1, but are you seeing that same sort of like projection going forward into 2024 as we look at it now?
Well, we are going to be in a halving, so we'll see what that means going forward. The key to growing our business in Q1, it seems to be continuing to progress with the action that's happening in Bitcoin. As we grow, Dorothy 2 will be the way for us to continue to grow that footprint. So if you look at the upside case of the halving plus the addition of Dorothy 2, it's a meaningful change in the growth trajectory of the business. Depending on what happens with the halving, I think our revenue will stay fairly stable, but we'll basically combine that with the Dorothy 2 revenue to continue to scale that up. And so we're feeling pretty good about our position in the space relative to this phase of the Bitcoin network.
One of the questions on the balance sheet for a pass back over to Bryce is with regards to, and we asked this to all CEOs about, obviously 2022 was like the year that a lot of miners were found out with the debt on the balance sheet. You've got a little bit of debt on the balance sheet. What's the plans to sort of reduce that, if any, at the moment?
So the primary debt item that we have on the balance sheet is 2 things: the convertible debt, and we've been working with them to restructure their debt to allow them to convert out or us to pay down that debt, and we've made significant progress on that. At some point, the value of that debt was over $15 million, and most recently that's come down south of $10 million. The second item is the NYDIG debt, which was a debt that we had around machines at our Marie site, which we decommissioned in 2022 or early part of 2022. There are some litigation related items related to that, so we can't get into detail. But our view is that we've done everything we need to do there. They've been able to benefit from the sale of the machines that were related or collateralized by that. And we're basically working through the court system related to the rest of that. And so I can't talk too much about that, but there isn't any cost that is related to that other than that litigation that's sort of driving that. And on the convertible debt, I think it's important for folks to know that there aren't like interest payments or debt that's being paid on a continuous basis to that. That's essentially it converts out or we pay it down, and it's a the interest is integrated into the balance of it, if you will. And so that's how we look at that those debt items.
Thanks for clarifying.
Gotcha. Appreciate the update and the breakdown there, John. Now, I wanted to touch back on Dorothy 2. We just heard how impactful Dorothy 1A, 1B was to your 2023 results. Dorothy 2 is obviously going to have a tremendous impact on this organization as well. You just made reference to how it's such a big project coming online for the team. When can we expect that, and how should we think about Dorothy 2 in terms of impact to the business?
Absolutely. So Dorothy 2, I'm really excited about Dorothy 2 because, as I just said, D1 was our blueprint. So Dorothy 2 is going to be the first time we cookie cut using that blueprint. We're going to double the size of D1, and we're going to take that same model and move it to Project Kadi. Dorothy 2 is a 48 megawatt project. It's actually a 50 megawatt project if folks who know Soluna remember. But if you remember, early part of this year, we talked about taking 2 megawatts of that and focusing it on the Helix program for AI. So the crypto side will be 48 megawatts. And we did some, according to our own financial modeling, we think D2 has the potential to generate up to about $14 million of additional annualized project level operating profits for the company in the Bitcoin hosting revenue, assuming we owned 100% of the project, let's say. But if you consolidate it, we are going to see that in our financials. And the project forecasts an outstanding return on investment capital. So I think we can say that investment, if you look at the full capex of the project, would be returned in about 27 months. And, that's why we actually have more partner options available to us. We haven't announced the partner syndicate that we will select yet, and that's coming soon, so stay tuned. But the goal will be to essentially start the construction of D2 this quarter. We're in Q2 now, and get that energized, in the second half and begin to ramp it up by the second half of this year. And so we're really excited about that as well.
Now, a couple of additional questions there, John, and this can be for Dorothy 2 or just generically for your partnerships projects moving forward. When we do see Dorothy 2 come online, how much of that project can we expect Soluna to hold? And do your partners, I know you said you haven't selected one yet, do they help kick in any of the CapEx costs or the upfront costs of these development, or is that kind of worked into the agreement at a later point?
Good question. The first thing is for Dorothy 2, when we announce, we'll sort of tell you where we land. We haven't determined it yet, and it's based on a structure that we're developing with our partners. To remind folks, the way we finance our projects are really three ways. We develop the projects, and that is typically our own capital we're using to get them to a point where they're shovel ready, okay? And then we sign a partnership agreement with a project level investor or investment syndicate. Usually there's one or more partners that are coming in. We develop a structure that says this capital is going to be used to build the project. So all of the CapEx is allocated to do that. And then we determine whether we're going to do all of that as equity in that project or a portion as debt and so forth. So the syndicate is a combination of debt and equity. And then so the three ways are debt, equity, and then our own equity, where we're able to pull in capital through raising money at the parent company level and then injecting it into the project. And the combination of those three things determines how much of the project we own. If we put a large portion of the equity in the project, then we'll have a large portion of that equity and a lot of the cash flows comes back to us. If we use leverage, then that gives us the ability to have less cash that we need to own more of the project. So we're thinking through how best to construct those things. That's true in general for all of our projects. The nice thing, though, is that because we created the opportunity, it's a way for us to get other options to generate revenue that are driven by the profitability of the project. For example, the D1 project, we started out being a majority owner of all of the elements of the project. And during the tumultuous period, we sold portions of that to our partners. But in each of those cases, we still retain this concept of a developer profit or a future profit earnings that comes from the investors getting all of their money back plus a return. And then after that, we get this carried interest where we get half of the profit. And so as long as we can return their capital within that time frame and the return, then suddenly we have 50% of the profits coming to us forever, right? That's the benefit of being a infrastructure owner. You own the asset, and so the access to cash flows is really about the way you structure it. But eventually, you get access to more of those cash flows once you've generated that return. Now, when we first started the business, we would model this out. We had some intuition about the potential for this to generate those profits. And we now have 1 year's worth, or I guess since May of last year until now, which is, about a year's worth of experience that it actually does work. And so all we have to now do is take that and literally scale it. And as we scale it, more and more of that cash will come into the company, which we recycle to develop more projects and build that sort of flywheel to grow the company. And so what excites me about D2 and beyond and other projects is we know exactly how we will monetize them. We also operate the facilities, so we make revenue that way. We do all of the maintenance and services for it. We inject third-party customers in there. So we're monetizing this project in a host of different ways. And so I get your question, and the answer is we've designed a repeatable way to finance the projects and then help them to scale the business and then bring more cash into the company over time.
John, just the I mean, it's great to hear about it. Does the increased Bitcoin price in the last sort of 3 months benefit you doing more? I mean, you guys have to have a plan going forward, and then that will assume a price of Bitcoin. If we go back to January and we saw, articles put out by some of the big analysts in New York saying where the Bitcoin price they felt would be and how many mining companies wouldn't be able to mine post the halving, it looked doom and gloom for literally everyone bar about 2 miners. But we're seeing the Bitcoin price stabilize in this 60,000, 70,000 bracket. Today it's over 60,000, 67,000. Are you benefiting across these projects from that price, or are these more fixed fees? Mainly relevant on the Bitcoin price, and can you change your plan, to structure the benefit if there is one?
Yeah, good question. So every project that we build out, we architect a business model or plan for that project. Okay, and the nice thing about our projects is you can sort of cut them up into different chunks, and then have different business models within those chunks, and combine them into sort of a pie that is diversified as possible. And we started doing that last year, where we went from basically every project, the business model was proprietary mining, to either proprietary mining or joint venture-based proprietary mining, like in Dorothy 1B, where that has more direct exposure to Bitcoin and Bitcoin mining and Bitcoin cycles and Bitcoin exposure, to hosting models where there's a fixed cost and sort of like a floor revenue, if you will, right? Depending on what's happening in Bitcoin, there's like a minimum we would earn, and then we make sure we put large credit-worthy customers in those facilities that have the capital and balance sheet to buy the most efficient machines and refresh their machines and stay up to date, are the ones that are in our facilities. And they also have the technology to optimize the performance of those machines during the halving, ensuring that, the revenue that would be allocated for the hosting services we deliver to them is fairly stable through that period, and they will survive, right? So we've shied away from, small mom and pop, if you will, miners in our facilities. These are all very large, credit-worthy strategic partners or miners themselves. And so today, if you look at our revenue mixture, 2/3 of that is more the fixed price, with some JV stuff, like our Sophie facility is hosting plus a profit share. And then a third of it is direct exposure to mining. So when people are analyzing us and looking at our business and saying, and trying to compare us to the full 100% proprietary miners that have direct exposure to Bitcoin and the halving effects, we're a little different, right? Where only about a third of our business is actually directly exposed. So that creates much better, predictiveness of our revenue. Now, going forward, as we design new projects, right? Your question is, can we choose? Yes, we can choose. If we say it's better to do a little more prop mining because Bitcoin is on a tear, we have the ability to do that. And our corporate decision is to always do that with a partner. So we ensure that there's always capital. The thing about proprietary mining is, you go buy some machines, you pay a price, and hopefully you've structured that purchase to return your capital very fast. But at some point, you have to refresh those machines, and you better make sure you have capital. Otherwise, you run into these situations where you can be upside down, which is what's going to happen to a lot of the folks that don't make it through this cycle. So we have a structure where we use joint venture partners, and the partner has to have the ability to refresh the machines with us at the right time. We can do hosting, and as we prove out Helix, we'll be able to do AI in the project, and other types of joint ventures that we haven't announced yet, but are based around a lot of momentum in the AI and sustainability space, where power has become like gold, right? If you have access to power, there's lots of people who are interested in getting access to that power to build AI factories and so forth. So if you look at those different options, it gives us a nice, diverse set of strategies we can use to implement each project, and we can do one, more, or all of those strategies in the same project. That's the exciting thing about the Soluna business model.
I gotta say, John, we'll move into AI HPC in a sec, Anthony, but I absolutely love this business model, John. Hearing you talk about the project level financing, the payback periods, the flexibility you have with this infrastructure once it comes online, it really does make a lot of sense. And this is something we're hearing even from some of the largest miners, is that they're starting to look at stuff and evaluate it on a project level investment and return. So just wanted to throw that in there. The more we talk to you, the more I learn about this company. It seems like you've got that cookie cutter process figured out now. And the more you do it, the quicker it gets, the cheaper it gets, the more efficient it gets. So I just wanted to throw that in.
Thank you.
Just as we're getting close to the end of the interview, the Helix project, and you mentioned about the 2 megawatts. I mean, actually, it doesn't sound a lot in terms of when you compare that to what you use for Bitcoin. But for HPC and AI services, that's a lot of power being utilized. And we've seen a number of your peer miners come out in the last few months highlighting they've got contracts, they're expanding that side of the business. It seems that about 8% of the miners that I cover are now looking at HPC as well. What can you sort of tell us from the future of that particular project, and how and briefly, how would that be? How would you capitalize that project? I mean, we've talked about levers of finance. You can sell Bitcoin, which you're doing. You can raise debt, which you have got a little bit of debt on the balance sheet. And you can also look at dilution, which a number of miners are doing now to grow. If you could sort of touch on that very briefly, please.
Absolutely. So, you're right, Anthony. The crypto industry has been doing I'll call it the big pivot, right? Everybody's moving into a revenue diversification posture. A couple of things I want to comment is when we plan to do anything, when we are looking to form a new business or go into a new venture, there's a tremendous amount of thought around what's going to be our differentiator. What are we going to be doing different that differentiates our brand in the marketplace? AI HPC has always been part of our company strategy. Internally, we call it phase two. When I presented the strategic plan to our board 3 years ago, I explained to them that Bitcoin was the first phase. It was a way to prove out this infrastructure-focused model that integrates with renewables. And AI and HPC, we didn't know that Gen AI would take off, but I had an intuition, given my 25 years experience in transformational technology, that the market was heading to a place where you would have this transformational capability in computing that would be perfect to leverage in these renewable environments. So what's been our focus? One is what we've become really good at, as I said earlier, is an infrastructure business that integrates with renewables. So we know how to source power. Well, guess what? AI needs that very much. We're leveraging our strength in power to meet AI's biggest challenges right now. It's a power-hungry technology. It's a thirsty technology. It uses too much water at this point. It's dirty and it's not very sustainable. So we aim to create a new venture that will deliver solutions to customers that are looking to train, tune, and execute the next generation AI models for the enterprise. And we plan to do this both sort of as a cloud and hosting approach that we're taking. And we're going to do something different in the data center space, right? We're not just going to say, let's go build whatever data center. We're going to prove that you can do this type of computing in these remote parts of the country where there's massive amounts of sustainable power by bringing the compute to that location and putting it in a completely new data center design, we call Helix, that will address those three problems. It's hunger, it's thirst, and it's sustainability. And so what do we focus on right now? Now that we have clarity around our posture, right? Go power first, unique data center design and innovation second, and focus on differentiating ourselves, basically delivering sustainable, scalable AI. So we've been focused on forming some strategic partnerships. We can't do this on our own. So some key partnerships we will be announcing around this year. We've been focusing on capital. You ask how we're going to capitalize this. Well, it turns out there's a tremendous amount of capital, way more capital available for these types of initiatives. And we've been introducing ourselves to the capital markets through an advisor we hired and putting together a presentation that introduces this new business that we're going to be creating. And that will be structured much like we do today, which we're very good at, is project level structures where you have debt and equity partners come in to finance the construction of the Helix buildings, the machines, if we're going to do hosting and other connectivity related infrastructure. We're focusing on data center design. We're focusing on attracting more customers. We signed our first AI hosting customer this year. So we're learning a lot through that process by essentially incubating the business inside of Sophie. And we're going to scale it at Dorothy and our other projects, something we've done in the past. We always take this sort of start small and scale approach. And then we're also looking at the team. We're looking at bringing new expertise to our company that brings data center, AI, analytics and machine learning expertise to help us to shape this new venture. So what I would say to our shareholders is, we're not doing like our peers and just saying, hey, we just bought a bunch of GPUs and we have an AI business. We're going to create an AI business and architect it and then grow that over time such that it becomes a meaningful part of our business. So stay tuned.
So much going on, John, and what a great way to round off the interview. I know we've covered a ton of content today, everything from earnings to growth to AI to renewables. I'll kick it back to you guys for any closing thoughts, but always informative, always educational, John, and really appreciate your time today.
Thank you. Thank you, Bryce. Well, I'd say my closing thoughts are, look, from my perspective, Soluna is a strong buy. Many people, investors, continue to beat a drum out there that we're going to die. And what I can say to that is that I'm honored to run the most resilient team and lead the most resilient team in the industry. We have steered our ship out of these, turbulent waters. So look at our track record of sort of, steering our ship and executing. And we have a lot more to do. And we're now in growth mode again. And that's really exciting for our team. We are continuing our plan to, diversify our business. And this company is more than just Bitcoin mining. And in the long run, that has the potential to create enormous value for our shareholders. So until next time.
Excellent.
From my perspective, it's great. It's great that you've got that diversification and that flexibility to move into spaces as they present themselves. So that's really useful to know. It's not just a pure Bitcoin self-mining organization. There's a lot more to Soluna Holdings than people realize. And hopefully, if they get to watch this video all the way through, they'll understand a lot more from it.
Most definitely. If you are still sticking around, you guys, make sure you hit the like button. It's a huge help to our channel. It helps get this content to other people who may be interested in the Soluna story. If you're not subscribed to the channel, we just hit 43,000 subscribers, so feel free to join the community. We'd love to have you. And with that being said, leave a comment in the section below. Let us know what you thought of John's discussion today, his outlook for the company, and track record of Soluna, and we'll see you in the next video.